I need your take on the Fed. The equity markets and the currency markets sort of were tilting hawkish. What's your interpretation?
So two big phenomenon that we think are important and we're all seeing play out today and going forward. Obviously, interest rates and the Fed, as you rightly ask, as well as the trade war. I think it's important to just step back and realize we are clearly in a rate declining environment. So from a credit investor's perspective, indeed from any investor's perspective, this is actually a healthy environment in which to be allocating capital and thinking about it. We have a rate environment on a global basis with the tendency and the bias is down. While economics are uncertain, we clearly have the Fed on a path towards, giving us lower rates, as we just saw, though there's uncertainty and division amongst the various Fed members. We also see the ECB doing the same thing, and as we all expect, Japan will hold steady, but also giving us a low rate environment. So the low rate environment from a credit investor's perspective is a healthy thing. Marry that with the trade uncertainties, which I'm sure we'll talk about. That also gives us environment while it's impacting the economy and creating troubles and tribulations and uncertainties in the economy. It also is giving us an environment in which growth is still good in Asia. And so we see this as actually in the medium term perspective, a fairly stable, steady environment with volatility and uncertainty in news in which to be allocating to the credit space particularly.
Yeah, there is a bit of a kind of Goldilocks scenario here that perhaps we could be seeing some growth in Asia. Robert, but we are late in the cycle, some say. Yield curves are also flattening. In your neck of the woods, though, are you seeing signs of a recession?
I think recession is a tough word in Asia when you're still talking about growth rates that are, the highest in the world. And so pullback, absolutely. Recession, at least from an Asian economic perspective, China, India, perhaps Japan, right? But overall, as you think about, this is the world's growth engine. So I think we worry here more about that pullback, and that pullback will have implications and does give us thoughtful. We want to stay at the strongest companies that are less impacted by that, those survivors that are consolidating. But really, we're not worried about a recession. The ripples of a potential U.S. recession potentially creates, ongoing opportunities and will give us difficulties, but we're not thinking recession here in Asia.
Robert, Tom here in Beijing. We heard from Mark Weidman at BlackRock saying that negative interest rates are essentially poisoning the financial system. It sounds like you don't agree with that analysis. Just work through us why you think that is the wrong conclusion to come to, if you do indeed.
Actually, I'm not sure I disagree. Poisoning is a big word. It is clearly problematic for the entire financial system. We have to acknowledge that negative rates and how do you build for us pensioners and for all of us capital appreciation. So I do think it is dangerous, unprecedented, and difficult to deal with. In that environment, which is the reality, we think Asia is actually a very healthy place to be. We're not in a negative rate environment, and let Europe worry about that very dangerous and difficult environment to operate in. But in Asia, we actually have positive rates, some of the highest rates, and growth rates. So when you talk about absolute rates and when you talk about growing economies, we actually find many investors logically thinking about Asia now as a real, not emerging market, but as another major economy and another place to think about the $55 trillion credit market that does exist here. So if you previously allocated to Europe substantially, I think we're seeing allocations in credit as people try and address this real problem of negative rates and bringing incremental capital and building portfolios increasingly to their Asian orientation versus what they'd seen in Europe. So it is problematic. Perhaps Asia will be the beneficiary.
Given the higher rate environment here in China, are you adding exposure to China? Are you putting more money to work here?
Yes is the quick answer to that. I think we always take a stable, consistent, long-term approach to any of our allocations, but we've been allocating incrementally to Asia, broadly speaking. That includes China as the dominant player, and We're proud to have a dedicated team on the ground that focuses on just that. So we clearly are increasing our exposure to China and think there's really compelling opportunities there. I would also add that that means the rest of Asia. So we have an Australasian business that we find particularly interesting in a strong rate environment where you can do yield pickups in Australia, in Korea, and some of the other economies that benefit around the region. Perhaps less Japan, but in the rest of Asia, we also find quite compelling opportunities and a rate differential against the U.S. that is also attractive in the more immediate time frame. So long-term allocators to Asia, but also short-term relative value in the immediate environment we see today.